In this video, we're going to be treating how to place a trade. So that is exactly how what to do to get into a trade, what to do to open a position in the forex market. So there are two ways to place a trade. Number one is called instant execution, and while number two is called pending order. Instant execution allows you to open a position at the current market price. In other words, no waiting, you're just getting in right at where the market is. And however, there are two types of instant execution. Remember, as forex traders, we could either buy or we could sell. So it applies in placing a trade as well, which informs the two types of instant executions we have, which is buy by market or buy instant, depending on what your broker calls it, or sell by market or sell instant. So let's look at how this instant execution is carried out on our charts. Okay, so to place an instant execution in this scenario, this is Euro USD. To place an instant execution for a buy, what you do is you come to the upper left corner of your MetaTrader 4 and you click on new order. So soon as you click on new order, you realize the current pair where you are on is what shows in the symbol. However, you could choose to then change it to whatever you like. However, I don't really advise it so you don't get confused. And then what you then do is to input your lot size. So let's input 1.50 lot size, and then the next thing is you fill in your stop loss. So let's determine 1 point. So what you just do is you type it in 1.06278 is your stop loss, and a take profit of let's say 1.09571. So remember, it's an instant execution and we want to buy in this case. So after inputting your lot size, your stop loss and your take profits, the next thing you do is you click on buy by market instantly, and you can see type, that's market execution, which is also instant execution. So we have buy by market, so you click it and you get it straight into the market, after which you click OK. So you see immediately our position got filled, and you can see over here we have the buy according to our lot size, the stop loss has been fixed, the take profit as well has been fixed. So let's open our terminal to see if the trade is truly running. So once again you click on view terminal. So you see we have the trade. As at this particular time, we placed a buy on Euro USD using 1.50 lot size. Immediately our buy position was filled at 1.06830 with a stop loss of 1.06278, a take profit of 1.09571, and then the current market price as at right now is 1.06824, and in this case our broker charges commissions, no swap, because we haven't held the position overnight yet. So immediately our buy order got filled, and should in case you also want to sell, it's exactly the same thing. So let's go on $CHF to place a sell and see how it works. So let's place an instant execution sell in this case. Once again we click on new order. So let's assume this level becomes our stop loss and our take profit is at this level. Using the same lot size now, what we do is we input the stop loss 0.99127 and then a take profit of 0.96373, and in this case we simply click on sell. and immediately we are filled because it is an instant execution trade. So immediately our take profit is adjusted, our stop loss is fixed, and then we get into the trade automatically. So that is how the instant execution trade works. So let's look at the other type of way to place a trade. Now to pending order. A pending order allows you to open a position at your own desired price level. Now what this means is you have to wait for price to get to your pending order before your position gets filled or opened. There are 4 types of pending order. There's the buy limit, the sell limit, the buy stop, and the sell stop. So for buy limit, your intention and your expectation is for price to go up. Remember, that is why it's called a buy. We buy when we want price to go up. However, you are willing to wait for price to come down first, which is called a retracement, to your entry point. Then it will fill your order and then start going up for the buy. Which means for a buy limit, you believe price will still sell a little bit, so you put your pending order just below price to sell, PQ, and then begin the buy. However, for a sell limit, your intention and your expectation is for price to come down. Remember, price needs to go down for it to be called a sell. However, you are willing to wait for price to go up first, which is a retracement, to your entry point, fill your order, and then start coming down for the sell. Which means for a sell limit, you still believe price might probably buy a little bit, so you put your pending order just above price, so price buys a little bit, picks you at an higher price, and then immediately reverses and starts selling. Whereas for a buy stop, your intention and your expectation is for price to go up. However, you are willing to wait for price at a higher level to pick your entry and continue going up. So unlike the limit order, you want price to first go the opposite direction, PQ, and then start moving in your expected direction. However, for a buy stop order, you place your entry above the current market price, expecting that price will keep going up, PQ, and continue going up. And then for a sell stop, your intention and your expectation is for price to come down. However, you are willing to wait for price at a lower level to pick your entry and continue coming down. So what this means is that unlike a sell limit where you wait for price at a higher level to pick you and then start the sell, for a sell stop, you place your entry at the level below the current market price and you expect that market will sell, keep going down, pick your entry, and continue going down. So let's look at exactly how this plays out on our MT4. So on this $CHF chart, remember we want to sell. So let's look at how a pending order works, starting with the sell limit order. So let's start with the limit order. Remember, for a limit order, even if you want to sell, our expectation is that price will probably go to a higher level, pick us, and then start coming down. So since price is currently at this level right here, which is 0.98508, for a limit order, we wait for price at a higher level to pick us and then start selling. So in this case, let's assume our higher level is a little bit above the current market price, which is 0.98858. So what you then do is you click on new order once again. If we're maintaining our lot size, in this case, let's maintain our stop loss, let's maintain our take profits. So what you then do is you click on type, you click on pending order, and then on type again you select sell limit. So the difference now is, for the instant execution, we don't put in a price at which we want to get filled. However, for the pending order, you have to put in your entry price. So in this case, our entry price, because it's a sell limit order, we still feel price might go up a little bit to pick us before it starts selling. So let's use this as our entry price. So that's in our price, we fill in 0.98858, and then the stop loss remains the same at 0.99127, and the take profit remains the same as well at 0.96373. And then instead of clicking sell by market, in this case all we click on is place, and you click on OK. So over here in our terminal, we can see a sell limit order has been placed on $CHF using 1.50 lot size at 0.98858 price, with a stop loss of 0.99127 and a take profit of 0.96373. So this is where our sell limit order is. Now the advantage of the limit order over the pending order is most of the time it helps you reduce the amount of stop loss you are going to use. So for the instant execution trade we placed it at 0.98641, making our stop loss about 46 pips and our take profit about 225 pips. However, for the pending order, that's for the sell limit order at 0.98858, our stop loss becomes 24 pips as opposed to the 46 pips of the instant execution, and then our take profit now gets increased at 246 pips. So that is the major advantage of the limit order over the instant execution order, and even over the sell stop order or the buy stop order. So in the case of Euro USD, let's do similar. Let's place a buy limit order. So let's place a buy limit order at 1.06604. So what you do is you click on new order, you select market execution, change that to pending order, and then we fill in our entry price at 1.06604. So that becomes 1.06604. Our stop loss remains the same at 1.06278, and then our take profit is at 1.09571. And once again we click on place and OK. So automatically our buy limit on Euro USD has been placed. So now let's look at the difference in stop loss as well. The difference now is for the instant execution order we placed at 1.06830, our stop loss is 54 pips with a take profit of about 274 pips. However, for the pending order, that's the buy limit order, our stop loss is about 34 pips, increasing our take profit to about 294 pips. So that's the major difference using a limit order over using a stop order or an instant execution order. Most of the time it helps us to get a lesser stop loss and a higher take profit. So let's look at the third example, which is the stop order. So in this case, Euro USD we want to buy. However, for a buy stop, we don't want price to come down. We want price to keep going up, pick us at a higher level and continue going up. So let's put a buy stop order at a price higher than the current market price. Let's put it at this point, which is 1.07112. So once again you click on new order, and then we select market execution, pending order, but this time around we select buy stop, and then our price level for the buy stop order is 1.0112. 1.07112, and then the stop loss remains the same at 1.06278, and the take profit becomes 1.09571, and then place it. Okay, so over on our terminal, this has already been placed, a buy stop using 1.50 lot size to be filled at 1.07112 with a stop loss of 1.06278 and a take profit of 1.09571. So over here now we have an instant execution buy, we have a buy limit as well as a buy stop at a higher level. So the difference is for the buy stop, it's much more safer, however the risk is usually more. So let's look at how many pips the stop loss is. So now our stop loss is 81 as opposed to the 30 something while using the buy limit and the 50 something of using the instant execution. So with an 81 pip stop loss, our take profit is also reduced to 247. So that is the major difference or the major disadvantage over using the various pending orders. So on $CHF, let's try doing a sell stop as well. So for a sell stop, we have to wait for price to sell, keep selling, pick us, and then continue selling. So then we put our sell stop order at a price level below the current market price. So let's put it at 0.98330. So once again you click on new order, click on market watch, select pending order, buy limit type, you select sell stop this time around. Sell stop, we put in our entry price at 0.98330. Our stop loss remains the same at 0.99127, and then our take profit at 0.96373, and then we click on place. Okay, so let's calculate how many pips our stop loss now is. So if our pending order, if our sell stop order is at this point, so our stop loss becomes about 78 pips, and then our take profit is 192 pips. So that is the major difference between using the various pending order types.